Right, so Abhay Agarwal of Piper Serica is joining us now to take the discussion forward. Abhay, afternoon. Thank you so much for your time, for joining us at such a short notice. We were running out of ideas what to discuss because of lack of very big stories. So we thought of just putting a lot of smaller stuff together and bunch up and we were discussion. Let's start with two notes which caught our attention this morning from the strategy note front. One is CLSA, which says that everything in this market right now is priced to perfection and the scope to go wrong on valuation front, on earnings front is little. On the other hand, Nomura says that by the target which they have set on the Nifty, it itself means 10-12% kind of return expectation should be there on index. So we thought, it appeared to us that both of them were kind of ringing in a bit of caution. What is your approach right now after having a very good, last 12 months for Piper Serica as the PMS and for all your clients? Have you also kind of starting building in some caution in the form of your approach?
Yeah, thank you, Ajay. Very nice to talk to you. So, with the run up in the markets, of course, valuations are, I would say, largely at the fair value level. And if somebody is only looking at the Nifty or the broad indices, they would see little room for returns from here. So I think the market is well poised on the large index basis. But at the same time, Ajay, on ground managers like us, we are always looking for opportunities where in a bull market, there is still a bear market going on. And that is where we frankly find our multi-baggers, so to say, because in a large market, it's not that everything is caught up in a bull rally and everything is overpriced. There are sectors, there are segments we have seen in the past, Ajay, you and me have seen jointly together, where the markets are completely ignoring a positive development on a down cycle that the industry has faced, or new macro support emerging, or a management team that is really competent, capable, turning around a business. And I think that's where opportunities lie for managers like us. Of course, looking at just the market levels, you would start believing as an overseas investor or a capital allocator that the markets are fairly priced at this point of time.
Interesting there, Abhay. Anisha also joining in the conversation. Which are those pockets where you are identifying a bear market of sorts? I'm intrigued to know that.
Yeah, Anisha, we have been talking about this, so it's not something new. In fact, on your show also last time, I covered some of them. One was the large cap pharma space, where for last 3 months we are seeing some pricing power coming back, a shortage of generics in the US, lack of dumping of generics and intermediates from China. So, which was setting up a kind of a virtuous cycle for Indian pharma manufacturers, India pharma exporters. And I think that has already started to play out, I would say. I think we're still very early in that cycle. And none of these are buy recommendations, but, like you look at any of the large cap pharma stocks, Dr. Reddy's, Divi's, Lupin, Sun, they have all done well. The smaller mid cap stocks also have done well. I think that is one segment that hasn't done anything for the last 5 years, and investors who only look at prices to come up with an investment thesis would be late in the game here, is my guess. So I think that is one space, Anisha, that looks attractive to us, where we have already made our bet. The second is obviously the whole agrochem space, where we are seeing in India for the domestic markets. I'm not talking about exports of agrochem, but in India, there is very strong demand because everybody is, including the government, is looking to increase farm productivity, farm yields, and that can be done with crop protection, yield enhancement products. And there are companies which are doing some amazing work in that space with new product launches, technology, innovation, and all the hard work that has been done in the last 5 years by them, I think will start bearing fruit, and we will see that in terms of their market cap also. So I think, Anisha, these are the two segments that we believe will do well. And then there are other pockets like, the whole individual space like batteries for EVs. That's a big macro trend. I think there is a great opportunity for Indian manufacturers to really build EV batteries, not just assemble them. And themes like that, Anisha.
Okay. Abhay, just one sec. Sorry, did I disturb you? Did I interrupt you on that answer of yours?
No, not at all.
Sure, great. Okay, Abhay, I was, looking at some of there's a lot of manufacturing renaissance which is happening in our country right now. And there is a lot of hope, and every time we speak, several times we are quoted this data, there's just 7 households out of 1,000 have an air conditioner at home. Washing machine is even lower. But when I look at data, last 2-3 years, washing machine sales and air conditioner sales in our country had gotten, maybe because of very high competition, or at least the listed players' volumes had stagnated a bit. Industry was on a slightly slower growth, but they say that you have to see a 5-7 year kind of a view to see this entire phenomena play out. Would you directly buy a washing machine player or some of these, Voltas and Blue Star of the world, which have gotten in a big correction or comeback, air conditioning penetration angle? Or would you go in the direction of a guy who is manufacturing for them, up till now was only in washing machine and air conditioners, with now diversifying into other electronic manufacturing, perhaps like a Amber or a Dixon variety?
Yeah, Ajay, I think our bets are already in the latter category because we like scale, and manufacturing as a segment rewards scale. So the larger you are, the bigger you can drive tremendous efficiencies of size, and that size gives you higher margins, higher growth, ability to get large customers. And we have seen this again as a play out very closely through Dixon, which has gone on from strength to strength, from just being the largest LED TV manufacturer to getting into mobiles, other segments. And you look at what their peers like Foxconn, Winston are doing. I mean, they're really pushing the envelope where Foxconn is saying that they may actually start building electric vehicles, 4-wheelers for their customers. So I think the outsourced manufacturing as a concept is here to stay, and it will reward large players. So while there is nothing wrong with branded players like the ones you mentioned, but we would like to back very efficient, large and getting larger manufacturers like Dixon and Amber, purely for the reason that in India, nobody has seen the benefits of size and scale. And I think these companies will demonstrate that. And they've already demonstrated that in terms of their market price performance also.
There, Abhay, the notes that we were talking about, Nomura and CLSA, while they had a bit of a cautious view, they were both quite positive on financials. And the kind of updates that we've got from whether a HDFC Bank or the PSU banks like Bank of Maharashtra, Central Bank, or even the smaller names like RBL, they have been quite positive, and even NBFCs for that matter. Case in point being Bajaj Finance. Why do you think it's not reflecting in the stock price with that kind of enthusiasm as we are seeing in the rest of the sectors like real estate, for instance?
Yeah, Anisha, I think we do discuss this, and I think the reason is that some of the large cap financial services companies, banks and NBFCs are already fairly owned, so they do get incremental flows, but this is not a new story. I mean, this has been a story for last 5 years. We have seen Bank Nifty do very well year on year for last 5 years. So as a result, this is already a very large part of portfolio allocations. And I think as fund managers look for newer stories, newer opportunities, financial services, unless there is a very high growth stock, there is very little appetite to add right now. So I think where the action still is emerging in the financial space is in slightly smaller players, players that are focused on microfinance or smaller banks, like say a CSB bank or say microfinance companies like Credit Access or Spandana Spurti, because these are growing faster, and they are able to target a very large customer base just because of their business model. So I think my expectation is for a while, just because these large banks and large NBFCs are fairly owned, they may not see and fairly priced also, I would say, by global standards. If you look at US, the large banks have underperformed the indices. They're almost down 25% over the last 12 months. So I think in that environment, the appetite for larger banks would be limited, I would say, Anisha.
Last word, Abhay, before I let you go. The Dabur commentary on Q3 updates yesterday seemed to be suggesting they are a very kind of a conservative management as it is. This time they're saying early signs of some recovery are visible on a sequential front. And we've seen that some of these stocks, HUL, Dabur, Marico of the world, have already bottomed and started gradually moving up. Would you look at this space at all?
No, I would, Ajay. And in fact, as we talk, we are looking at it. We are looking for, because the good thing, Ajay, is, as you said, the valuations are not stretched, compared to what the volume growth can be over the next 3 or 5 years. So, and these are very, very well-run companies, in that whole segment. You have Lever, Nestle, Marico, Godrej, Dabur, a bunch of these large companies that have already built absolutely amazing distribution. And I think with the adjustment downwards in their valuations, they would be tempting. So we would wait to see the quarterly results, their commentary on volume growth, and the impact of lower commodity prices on their margins, and then make a bet.
Okay, Abhay, on that note, we let you go. Appreciate you joining us on the show. But talking about